to the cloud. Okay, perfect. Well, hey, first of all, I want to thank each and every one of you guys. We had a nice group of people that had accepted this seminar invite, and we have a nice little group of people. Looks like around 17 people are on for right now, and maybe more will come. But whoever's here is here, and I'm appreciative of you guys taking the time to kind of listen to this brief webinar. A couple of laundry details. Sierra, some of you guys probably know Sierra. She kind of handles all marketing and technology related stuff for the office. She is going to be on, she's going to be monitoring both the chat and the Q&A session. So if you have any questions, you can put it in the chat, and then at the Q&A, we're going to go ahead and answer any questions you guys may have. And that's, as always, that's kind of the area I look forward to. So we're going to kind of walk through some of the material just to maybe get the wheel started and kind of give you some updates on some things that are kind of practical applications. I had said to a smaller group in the beginning of this, but for those of you who are on, some of this may apply to you, some of it doesn't. If it does apply to you, great. Ask all your questions, make sure you get as much clarity on it. If it does not apply to you, it could apply to somebody that you know, a family member, friends. And so definitely in your comings and goings, if you hear some people talk about, oh, this new tax law, and I heard there's no tax on tips or overtime or different things like that, you can definitely let them know that you know a guy. We are accepting new clients. Uh, Always crazy to say that because kind of mid-February it gets crazy in here, and I'm like, why am I doing this to myself? But we just love to help people, so that's what's going on. So if there's some people that you find out that may have some questions about this stuff, let them know that you know somebody that can help. Okay. So with that being said, we're going to quickly talk about the big beautiful bill. Important update webinar. Before I go, just real quick in the chat, if there's anybody, why don't we do this? If there's anybody who cannot hear me, that's probably the best thing. I'll spend a couple seconds looking in the chat to see if there's anybody who cannot hear me. And seeing none, I'm feeling confident that everybody can hear me okay. Perfect. Thank you, Jesse. I appreciate it. Okay, so you're invited to the Big Beautiful Bill. It's an important update webinar. And let's see. So our agenda is going to be no tax on tips from 2025 to 2028. This new tax law is limited in that it's at this point only around for 3 years. So this is going to be a very interesting next 3 years. And I put no tax on tips in quotations because one of the first things I want to get out there is that even the concept no tax on tips, no tax on overtime, no tax on car loan interest, no tax on Social Security, all of those have little subtle nuances that don't necessarily mean literally no tax on any of those items. And tonight we're going to talk a little bit about each one of those. Okay. So the first one we're going to talk about is no tax on tips. Okay. So it's a new federal deduction. It's going to be around from 2025 to 2028, and it applies to employees and some self-employed workers. And I'll just pull over for a second. This is where some of the commentary will help. I have a client or a series of clients that are like hairdressers, estheticians, and different things like that. And they do services, and then they get paid tips, and then those tips are then part of a conversation about some of those tips can be reported and then they can be tax deductible. Okay, so those are employees and some self-employed workers. Now, another thing, just little subtle nuances to this. It's only for tips that you report. A lot of people, unfortunately or fortunately, however way you look at it, if you are in the service industry and you get cash tips, you have not historically probably reported those cash tips. If you did, or you were one of the unique people that did, you would file what's called Form 4137. So right off the bat, one of the outstanding questions is going to be, hey, what if I have cash tips and let's say I had $10,000 worth of cash tips and I want now to introduce that so I can write it off? Unfortunately, you will not be able to write off something unless you have officially communicated the tips that you earn either through your employer when you're waitressing or waiter, and you get credit card tips, or you have cash tips and you literally declare that amount. So that's something very important to be mindful of. And again, as I'm going through, I'm hoping to stir up some questions, and I look forward to answering those questions in the chat. So again, charge tips, shared or pooled tips. Some people who are like hostesses, they get some. Um, People that bus tables, they sometimes get pooled tips. But it must be reported on the W-2, a 1099, or Form 4137. So for example, let's say a restaurant server earns $38,000 in wages and reports $12,000 in tips on Form W-2. This is another thing we are wondering out loud. At this point, the IRS has not required the W-2 to reflect specifically your tips. So we are still trying to figure out because the IRS said this is a rule, but because we didn't do the rule until July 4th, we are not making payroll companies retroactively from January 1st, 2025 reflect the tips. Now, some employers or some payroll departments of employers may have decided to do that. If they did, great. If they didn't, then there will be the responsibility of the person who received the tips to be able to figure that out. And so I just wanted to put that out there. But if you report 12,000 in tips on your Form W-2, great. If it's not on there, we have to figure out what that looks like. There are subject to some limitations. The adjusted gross income has to be $150,000 or less. You do have to file married filing jointly, and you can deduct up to $12,000 of tips. Okay. Now, want to do this quickly so that, again, we can get to the Q&A. And again, load up your questions in the Q&A, and Sierra will read them, paraphrase them, and give them back to me. And as I answer the questions, probably in a few minutes. This is probably a very interesting, well, they're all interesting, but no tax on overtime. Again, that screams, oh, if I made $9,000 in overtime, then I get to write off $9,000 in overtime pay. That's not quite true. It's a new federal deduction that'll be around from 2025 to 2008, and it applies to employees and certain contractors. Now, this is very important. It's the portion of the overtime above your regular rate. For example, we call it the half in time and a half. And I know some people have double time pay. I know I have a buddy of mine who works for Kellogg's, and they get like double time pay, triple time pay. So one of the most important things, it must be reported on the W-2 or 1099 or some other statement. And again, this is a big deal. The IRS did not require employers or payroll departments to report qualified overtime on the W-2. I have seen some W-2s where it is reported on there. I've seen some W-2s where it's not reported on there. So what does that mean? If it's on the W-2, great. If it is not on the W-2, then you're going to have to give me or your tax accountant, if you happen to be somebody on here who I don't do your taxes, you have to give them your last pay stub. Then when it comes to your overtime, it is not the total overtime that you collected. It's the difference between your base pay and your overtime. That's called the premium, and I'll show you guys that in a second. Maximum deduction is $12,500 or $25,000 if, for example, both of you guys, both husband and wife or significant other, if they both have overtime, the max of $25,000. Again, there are some phase outs. They're pretty generous, so I think it's still going to catch a lot of people underneath these phase outs. Phase outs meaning if your income is over 150,000 filing single or 300,000 filing jointly, then you will not be able to claim this write-off. So here's the key, and I think this is one of the major reasons why I wanted to have this update. Let's say an employee earns $30 an hour, and let's say overtime paid is time and a half, which would be $45 an hour. I think there's a sentiment out there that the whole $45 an hour would be a write-off that you can claim. So that's why they say no tax on overtime. Wow, all the overtime I get is tax-free? No, it's the difference between the $30 and the $45. So the extra $15 an hour is deductible. That's why the math is going to be a little interesting. It's going to be a little bit of extra work for us because that is what's considered the qualified overtime, and that becomes a write-off. Okay, so just to be clear, employee earns 30 bucks an hour, overtime paid at $45 an hour, the extra $15, that is deductible, but that may not scream out on your W-2, and it may not be properly indicated even on your pay stub. So you're just going to have to give tax professionals like myself a little bit of grace as we try to figure some things out. We may have to ask you a series of questions looking at pay stubs, hourly rates. So just be prepared that if we attempt to do the overtime, we may have to do some extra work. But we're prepared to do all of that. Okay. Couple more. Employers may not report overtime pay, and this is again the reporting and compliance concerns. Employers may not report overtime pay because employers were not required to in 2025. They will be required to starting January 1st, 2026. So it's going to be probably much easier to work on this no tax on overtime in subsequent years. But for 2025, there might be some nuances to it that we have to figure out. And because again, employers were not required, or payroll departments for employers were not required to report that on the W-2. A couple more things, and then I'll shut up and answer any questions you guys have. No tax on car loan interest. It's a new federal deduction for auto loan interest. It's again effective for 2025 through 2028. Personal use vehicles only. You cannot buy it for business and then attempt to claim the write-off. It has to be personal use. Also, it cannot be a used car. It has to be a new car. And some other things that are of note. We have to deduct the interest on qualifying vehicle loans, and in a couple seconds, I'll kind of tell you a little bit more about what that means. Leases do not qualify. I leased in 2025, I leased a car that unfortunately did not qualify because it's a lease. The maximum deduction is $10,000 annually. Okay. Now, if you think about it, here's one of the nuances. We have never, as tax professionals, asked for the total interest paid on a car loan. For that matter, those institutions, Ford Finance, GMC Finance, those companies by design do not mail out end of the year's tax statements. They say this is how much interest that you paid on the car loan. So for that reason, if you qualify, we're going to have to do some extra work to try to identify what that interest is. And it phases out for 100,000 or 200,000 if you file jointly. So what might happen is we may have some people that did buy a new vehicle that qualifies, but between the two of you, you make over $200,000, and so then you won't qualify. And then that'll be all up to us as tax professionals to figure out. Here, what counts as qualified interest? The loan had to have been originated after December 31st, 2024. So effectively January 1st, 2025 and beyond. Secured by a lien on the vehicle. So you can't buy you can't pay cash for it. You can't get a loan. You can't borrow money from your line of credit at your home equity line of credit and then try to use that. It has to be GMC finances, Ford finance, Mazda finance, or things like that, Toyota finance. Again, personal use vehicle. And here's the big deal. Final assembly needs to be in the United States. I had a client, and this is the good news, this qualifies. I had a client who bought a 2026 Tesla September 29th, 2025. Um, so we're working through some things. But one of the things I needed to ask that person was, I need the VIN number, because then what I have to do is to go to this website called VIN Decoder. I have to put the VIN number in, and I have to put the model year, which in this case was 2026. And here's the most important thing. You see where it says plant information? Fremont, California, United States. One aspect of this law, you cannot claim the interest unless the car that you bought, final assembly happened in the United States. And so if you look right here, here's an example of the car. It's a Tesla, and that was manufactured in Fremont, California, or at least final assembly was in Fremont, California. And here's another vehicle that I looked up, that if you look right here, it's a 2025 Mazda. But if you look right here, the plant information is Yamaguchi, Japan. And so what we have to do as tax professionals, if you bought a vehicle and it meets all the other criteria, we have to make sure that it was a plant that final assembly happened in America. So I am going to come off of that and jump back into, perfect. Okay. So that's that. So for example, $45,000 SUV purchased in 2025, you pay $3,200 in interest. If your modified adjusted gross income meets the phase out limits and you're below that, then we get to claim a $3,200 deductible. And finally, this is something too, a lot of my clients who are on Social Security, hey, I heard there's no tax on Social Security. And I kind of use this as an example. I had a client in the office a couple of days ago. The husband maybe got like $23,000 in Social Security. The wife got like $21,000 in Social Security. So then again, this notion out there that no tax on Social Security. Oh, so my $21,000 and my $23,000 of Social Security, it's not taxable. No, the Social Security is still introduced 100%. But then if you're over the age of 65, you get this extra $6,000 write-off. And if you're married and your spouse is over the age of 65, there's another $6,000. So there's a total of $12,000 of an additional write-off. Now, your Social Security is $23,000 and $21,000. So that's $44,000. But the write-off is $6,000 and $6,000, or $12,000. So no tax on Social Security. Actually, you're just getting you're getting a $12,000 offset on whatever portion of your Social Security is taxable. And then there's some other rules on what portion of your Social Security is even taxable based on how much money you make. So just wanted to spend a few minutes putting that information out into the atmosphere. And so again, some of the key takeaways: no tax on tips. Probably the most important thing is if you had any cash tips, it's going to be a little difficult unless you file Form 4137 to be able to claim the cash tips. If there's other tips that are declared, we're still wondering if the employer will reflect that properly on the W-2. If not, then you may need a pay stub, or we may have to figure something else out. No tax on overtime. It's not the complete overtime. It's the premium difference, that whole $30, $45 example where the $15 is the premium. We are seeing instances when employers are reporting the number on the W-2, and we have also seen instances where they have not reported on the W-2. And then we have to ask for pay stubs and then do some more digging. No tax on car loan interest. Probably the biggest thing is the car needs to be made in America. And so you need to give us the VIN number, and it has to be a new car. It can't be a used car. And the no tax on Social Security. It's not a no tax on Social Security. It's just if you're 65 or older, you come in with a new $6,000 write-off. Finally, clearly, this is probably one of the most consequential tax law changes since probably 2017 when the standard deduction changed. This has introduced a new form called Schedule 1A. And if that form is a part of your tax return, I am letting people know that that form has associated, for those who know, and I, I charge based on the forms necessary to do the taxes. That form has a price tag of about $77. So I want people also to be aware that if any of this applies to you, then I am going to have to get get it for you through utilizing an additional form, which is called Schedule 1A. So some of you guys are going to get fees. It'll be based on the taxes, but it might be like an additional $77 more than you might be used to because there is a new tax form associated with that. Okay. So no tax on tips, no tax on overtime, no tax on car loan interest, no tax on Social Security, and then that additional Schedule 1A will have an additional price tag of about $77. So most fees will probably be higher this year based on having to utilize this form. Okay? So with that being said, I'm going to stop sharing the screen. And then I'm going to look forward to hearing from Sierra. If you can maybe take yourself off mute. If there have been any questions put in the chat or anything, please, by all means, I'm ready to answer questions.
Well, hey, Mr. Fred. I think that you explained everything pretty well because as of right now, there are no questions. I
Okay,
don't see anything in the chat, and I do not see anything in the Q&A section of the Zoom. So I think you answered everything for everyone.
look at that. Look at how thorough that was. But I'll tell you what I'll do is I'll give it maybe like another minute or so and see if people have questions. If not, then, and as I continue to wait, I just want to remind everybody again, if it applies to you, just know we're going to be able to take care of it for you, no problem. If you don't think any of that applies to you, but it might apply to somebody, family, friend, or something like that, just know that we are accepting new clients. We have the capacity for new clients, and so we will be able to help people. So,
Oh,
okay,
I just saw a question, Mr. Fred.
awesome.
So the first question I see is how does the OT apply to subs?
Subcontractors, great question. Um, in subcontractors or independent contractors do not typically get an overtime pay. So, for example, let's say you do somebody's deck, or you pressure wash somebody's deck, or you do some type of welding or something on the side, and you give them a price, and let's say the price is $5,000. You don't typically say 5,000, but time and a half will now make it 5,500. So the short answer is most contractors, probably no contractors, ever have the concept of overtime. Overtime is typically a negotiated employee benefit. But thanks for the question. If there's a follow-up question to that, or if I didn't make that clear, then please, by all means, you can ask a follow-up question. Another minute or so if people have some questions. Again, we are recording this, so if anybody wants to, even if you wanted to share this with some people, like, hey, just reach out to Tammy or Sierra and say, hey, can I get a link to the video? Maybe I can share this with my daughter or my son or my cousin or somebody like that. We'd love to get the word out and the message out, try to help.
All
Um,
right. Someone they did sit there and leave another comment, but they stated that they'll just set up a time with Miss Tammy and then get on your schedule.
Sounds good to me.
And then there was one more question.
Awesome.
So I see something and it says, so for overtime qualification, would that be a difference between a W-2 versus a 1099 employee?
Yeah, there's typically not a 1099 employee. If you're a 1099, you're getting an independent contractor, meaning you're not seen as an employee of whoever you're working for. So the short answer is this: no tax on overtime or the no tax on the overtime premium is going to apply to employees that get W-2s.
I think
Somebody
so.
asked me,
Yeah.
what about the Eagles? What about them? No, that's not right. Who's hijacking my webinar talking about the Eagles? Awesome, awesome. Well, let me dismiss everybody, and we will have a sidebar on the Eagles thing. If there are no other questions about overtime tips, Social Security, or the car stuff, then I'm going to say to everybody, thank you so much. Sierra, thank you. And I'm always available. So if you can follow up, if you want to follow up with a text message or reach out if there's questions you think of later. Again, if you want to share this video with other people, I would love that to happen as well. All right. Thanks, everybody. Enjoy the rest of your night. And I'm going home. Okay, Daddy-O. All right, buddy. Take care. Bye-bye.